Holy smokers, folks, we have some important things to get into in this video here today. Public account, man, I knew this was going to happen. I wanted that $4 million number so bad, and went to the high 3.9s a week or two ago, and then ever since then, it's kind of been down, down, down. I knew this was going to happen. Every time you really want something like that, you know, like, oh, I want to hit that next level, always just teases you, and I knew it was going to happen, man. Sure enough, that's what's going on here, okay? Now, the NASDAQ's also gotten shaky. It's getting a little worried. And it's like, what's going on here with the NASDAQ? Well, why is all of a sudden there's this like shakiness in regards to the market, right? Something that's not shaky is Celsius Holdings. Look at this stock. It doesn't matter that the NASDAQ is going down. This stock is like, I'm playing my own game out here. Now up $150,000 on Celsius stock. Unbelievable. Shows another major momentum today, about 2.5% move when the NASDAQ and S&P 500 is down. EL stock, Este. So this stock was down for me here today, down about $5,800. We're up about $30,000 on the investment in total as of right now. They reported earnings this morning. A lot of people asking me, are you happy, Jeremy? Are you not happy? Are you worried? Are you excited? Like, what's the feeling in regards to that, right? Now, the last time I did a video on the main channel, I discussed that I made a new hedge in the market. Now, I didn't know there was going to be so much interest in regards to me making this new hedge in the market and betting against a stock, essentially. But the amount of comments I saw in regards to this was pretty extensive. Like, you know, I have a feeling the hedge was against Palantir, but I'm not in the private group, so I don't know, right? Because obviously it was a move in the private group, so everybody got to see the hedge. You know, I saw a comment like this: what do you guys think the hedge is? I'd imagine it's Palantir, but I could be wrong. This person thought it was VIX calls, right? Somebody thought I hedged against Hood. It was fascinating, right? I posted on X today, I said, should I ever reveal my hedge if this gets a lot of likes and comments? And it's crazy, 28,000 views, right? Versus 160,000, almost matched the same amount of comments. I'm like, oh my gosh, so apparently people want to hear about this hedge I have in the market, right? So there's going to be 3 core things we discuss in today's video, folks, okay? First up, what's going on with this market? Where are we headed from here? The overall market, okay? I'm going to share my opinions and perspectives there and what's actually happening, okay? Second, Este Lauder earnings, EL stock, right? This is now a pretty big investment for me in the public account, and I own shares in other portfolios as well. Where do I see that stock 3 years from now? What's going on with the business model, okay? And the third thing we'll get into in this video here today is this hedge. We'll talk about what stock it is and why that specific stock and what's the angle here, because it's got to have an angle, right? And I'll explain that in this video here today. So I hope you enjoy these 3 subjects. When I cover one thing only I need from you guys, please just hit the like button. If you could just do that for me, it means the world. Just please hit the like button. No one's too good to do it. Just please do it. I need at least 10-15% of people watching this video right now to do it. So if you can do that for me, it means the world, and that's all I need from you. If you want to subscribe to the channel, you can certainly subscribe. I believe we're at, what, 880,000 subscribers now, so appreciate y'all for being here. If you want access to all of my premium courses, Become Master Stock Market course, Millionaire Playbook course, Stock Options Mastery, Dividend Investing Mastery, my Valuation Mastery, access to my private Discord chat, exclusive weekly videos from me, 1000xstocks.com, all that stuff. Pin comment down there, click on that, fill out a form. Let's get you to a higher level than where you're at, okay? Alrighty, let's talk about this stock market. Listen, at the lows today, the market, the NASDAQ that is, was down over 3.5% just kind of in the past 4 trading days, right? So the NASDAQ getting a little shaky here, right? And you can see some of these kind of stair-step down moves, like definitely some shakiness in regards to NASDAQ. And you know, you got to ask yourself, what's going on here? Like, why all of a sudden, you know, is the NASDAQ getting shaky and scared like this, right? So here's what you got to understand. Jerome Powell is speaking on Friday morning. Now, there's a lot of interesting points. A lot of times he doesn't speak in the morning. He usually speaks in the afternoon. Secondly, this is on a Friday. Doesn't usually speak on a Friday. A lot of times you'll see a Fed press conference, Jerome Powell speak on Tuesday, Wednesday, Thursday, something like that. Friday, extremely rare, okay? Additionally, to add even more craziness to this is a Jackson Hole meeting. Now, Jackson Hole meeting used to be, you know, kind of a sleepy event in regards to the Federal Reserve. People didn't expect much, but all that really changed in 2022 with Jerome Powell's speech in 2022, which really let folks know he was very serious about upping interest rates and really battling inflation. And that was a whole situation for the market to go through at that particular time, right? So for a multitude of reasons, people are getting a little little scared about this. They're a little scared of this, what is Jerome Powell going to say? And people are looking at this and they say, there's no win in regards to the situation. Some people are very fearful because they're saying, listen, if he says, you know what, we need to start lowering interest rates, Trump's right? Guess what? Then people are going to start fearing like big inflation. You could see the 10-year pop big, which then would mean likely the stock market's actually going down. People assume like if Jerome Powell says, hey, you know what, we're going to lower interest rates, boom, boom, boom. They assume like stock market blast off. It's very plausible that initially the 10-year could spike and the market could go down significantly. It's just, if the high level talks from a lot of these Wall Streeters that you're not going to see really talked about out there, that's going on right now. Okay. Additionally, you could say, okay, he basically says, you know what, we're looking at all the data, it doesn't show we should cut right now. I'm sure maybe eventually we'll cut, but it's not right now, right? That could lead the market to say, oh my gosh, interest rates still aren't coming, right? There's going to be even more drama with Trump and the Fed and the big fight and, what's going to happen here? Is he going to crash the economy? Oh my gosh, right? So you could look at this event and say, there's no positive outcome here. That is something to consider, right? Now, here's the bigger issue with this event being on a Friday, okay? Listen. Time runs out on Friday. What is Friday? Friday's options expiration day. You have unbelievable quantities of put options and call options expiring in the billions and billions and billions and billions of dollars on Friday. Okay. Now, these options are going to create a lot of volatility in the market likely on that Friday, regardless of what Jerome Powell says. But it's very possible that if the market doesn't really like what Jerome Powell says, the market could tank heavy, given that it's an option expiration day. And you could have options expiring while simultaneously people start betting on the opposite side of whatever Jerome Powell. So let's say the market takes it as a huge negative, right? Whatever Jerome Powell's saying. Because a lot of people sometimes will fade whatever the move is, essentially. So you could have Jerome Powell come out and say, blah, 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 okay? Market goes blasting higher initially. And you could have people starting to load up on puts for next week saying the initial move is just basically a fake out rally. Additionally, you could have the market tank and then people saying, okay, the initial move is not the right move. A lot of times it's not the right move in regards to what the Federal Reserve's doing. And so you could have people then loading up on put options for the following week saying the market's still going down next week, right? So it's going to be craziness. And that's why this is so insane, because it's taking place on a Friday. You got options expiration here. It's drama, man. It is big drama. Now, the thing you got to understand about this, you might be like, why is everybody making a big deal about this? Listen, okay, me, almost all of you guys watching this video right now, we're long-term investors, right? We sit back, we make our investments, we watch those investments go up over time. Sometimes they go down when we're in a bear market, right? Or sometimes we're just wrong on a stock and they go down. That's fine, right? And we chill out and we listen to conference calls and we're just pretty chill. That's us. But we are a minority in the market. You have to understand that. We are not the majority. We are a minority in the market when it comes to active participants in the market, right? Passive income, passive investors that just invest in index fund, they're not active, right? We're like real active people that actually make moves, actually choose what stocks we want to buy and sell, but we're just chilling, right? Others, the majority, what they're doing is they're getting in the market, out of the market. You can listen to these Wall Streeters all the time. They're positioning in, they're positioning out, right? They're going long the market. They're going short the market, right? They're going cash. It's chaos, right? And so this event for them is a huge deal. And it has huge ramifications on what their clients think of them. If they don't position correctly, their clients might look at them and say, well, why didn't you position correctly for what Jerome Powell was going to say? And so sometimes what these Wall Streeters do is they position for everything, essentially. So then they can go to their clients, and if the meeting goes bad, market goes tanks, they can say, oh, look, we went short the market here and here, right? We were scared this was going to happen. And the client's like, oh, you're so smart, right? Or they'll go, they'll have their long positions in and they say, oh, market goes up. See, we knew it was going to go up, right? They maybe take some cash out. or cash some shares out here or there before the meeting. As obviously that's happened in the NASDAQ with selling pressure here recently. And so then their big high net worth individual comes to them and says, hey, what were you doing to prepare for that Jerome Powell whole deal there, right? We were cashing up prior to that. We were worried about that. Now we're buying it. It's just, that's the game of Wall Street. You got to understand it's a different game than we're playing. And that's why there's so much drama in the market. Now, the next important thing you have to understand here, okay? Everybody has to understand this. Listen. There is no such thing in the market anymore as the calm before the storm. Now there's the storm before the storm. So you look at an event like what's coming here with Jerome Powell press conference, right? And him getting out there and talking and what's going to happen. You could look at that and say the storm, right? So you could look at this week prior to him going out there to speak and you say this is the calm before the storm, but it's not. It's the storms. We're in the storm right now. So the people are preparing for the storm. And a lot of times what happens in the market now is when the storm actually comes, the storm already came. Essentially, it's a so backwards situation. But everybody forces a storm before you actually get to the storm. So by the time you get to the storm, it's actually nothing there anymore. Okay? So it's like, you think the tornado's coming in 3 hours, but actually you're in the tornado right now. And you just don't realize it, right? And then in 3 hours from now, when you thought the tornado was coming, actually it's not a tornado anymore at that point in time, right? Because there was so much volatility between that, event and when it actually happened there. So that's what you got to understand in regards to this whole market dynamic, what's actually occurring, why the market's getting so shaky, the positioning, why Friday matters so much. I hope you guys got a lot of value out of that portion right there, okay? Listen, next up here, Este Lauder EL stock. So stock up over $30,000 on the public count. $5,800 down today though on that one, right? So we lost some gains in regards to that one. That does not include dividends received from the stock because it is a dividend payer. So what's the deal with Este Lauder EL, right? I really like this company. They own a lot of the best brands in the cosmetics industry. If you look at their brands, I mean, there's so many of the high-end brands they own, okay? So you understand the game and the guide, okay? So the game, the company provided a financial outlook for its fiscal year 2026 because now they're moving into their fiscal year 2026. You got to understand that about Este Lauder. All companies had their fiscal year at like a different point. And so now Este Lauder is moving into their fiscal year 2026, okay? They're projecting earnings per share to range between $1.90 and $2.10, so we can call it $2 at the midpoint, well above analyst consensus estimates of $1.48. Now, my opinion is the $2 midpoint there is low. I think that's actually very low. Based upon how I see revenue coming back in the fiscal year, I think it's a low number. And based upon some of the profitability trends I'll show you in just a minute from cost-cutting measures, I think it's actually really, really low. Company expects sales to reach between $14.61 billion and just over $15 billion, which was also quite a bit ahead of where analysts were at. So their midpoint here for Este Lauder is around, we can call it $14.8 million roughly, or $14.8 billion roughly, right? And analysts are about 14.3. So Este Lauder is about 500 million ahead of analyst forecast here for their fiscal year. So that's definitely positive. And I think this is a huge part of why the stock ended up bouncing back as the trading date went along today, right? Now, in its fiscal 2026 guidance, Este Lauder has reflected several key assumptions. The company anticipates global prestige beauty growth to fall between 2 and 3%. Additionally, Este Lauder plans to implement stricter inventory controls and a substantial reduction in discounts to better align retail and net sales growth. Now, this is where things get really interesting, okay? In regards to China. Listen to Este Lauder in China, okay? In terms of regional performance, Este Lauder is forecasting mid-single-digit growth in mainland China, signaling early signs of market stabilization. The company also expects a modest recovery in its global travel retail business, particularly in the first half of fiscal year 2026, which would be the next couple quarters here, driven by improved shipment levels in Asia travel retail. However, the company cautions the volatility in the sector, including weak conversion rates, could temper overall performance. Cover your bases. Excluding mainland China, Este Lauder is projecting low single-digit growth in most other markets, with year-over-year growth rates improving compared to fiscal year 2025. For the first quarter of fiscal year 2026, the company expects low single-digit decline to slightly positive growth. That's for the first quarter. So basically kind of like a flat, we can call that like a flat lining of the business, essentially in the first quarter, which will be the next quarter they report here. Driven by strong results in global travel, retail, and solid performance in mainland China. The gains are expected to offset more moderate declines in other areas of the business, okay? Now, the important thing to understand about this, what is the big takeaway? Here's the big takeaway. Este Lauder is expected to get back to growth. That's massive, okay? And I'm going to show you in just a moment why getting back to revenue growth is going to be so insane for the company's margins and profitability in just a moment, okay? But that's what I need to hear. I need to hear a management team confident the company will be growing again in 26, and we've reached a trough and a bottom in this business model, right? Now, when we look at the balance sheet here, cash and cash equivalents, $2.92 billion versus $3.39 billion, right? Other assets, they had a major kind of like write down here, about $1.1 billion. Long-term debt, slight uptick there, but not much there. One of the positive things is current debt is almost non-existent from $504 million at the same time last year. Total equity on the company went from $5.3 billion to $3.8. That really reflects the tough year it was for Este Lauder. I mean, it was a most brutal year for the company in regards to profitability, everything across the board, really. Probably since I got in the stock market. Literally, since I got in the market, 08, 09, this was probably the roughest year I've ever seen for Este Lauder. It was a brutal year for them to go through, essentially, okay? Now, in regards to the income statement, right, everybody expected this. Net sales down 12%. One of the positive things is cost of sales actually fell 13%. Now, gross margin picked up. Guys, gross margin just went up with net sales down 12%. What do you think's about to happen to gross margin and the margins in general of this company as they start growing revenues again here in fiscal year 2026? Oh my gosh. Gross margins, operating margins, every margin across the board is going to absolutely skyrocket likely for this company. Now, additionally, if you look at selling general and administrative expense, they are able to bring that down 5% year over year. Once again, this is one of those things watch as revenue starts to increase again. When you got your SG&A going down, ooh, that's big, okay? They also had a restructuring and other charge here of $106 million and an impairment of other intangible assets of $425 million. So these all hit the profitability numbers in a major way because they add to the expense profile. But all these type of things are usually more like one-offs. This is more like stuff that's happening in 2025 that we shouldn't see recur essentially in 2026 and beyond. So all these one-offs that kind of kill the profitability right now, that should all be basically going bye-bye. And so what we're going to watch emerge for Este Lauder over the next 1 to 2 years is an incredibly profitable company. And we could be looking at an Este Lauder that turns into the most profitable Este Lauder we've ever seen in the history of this company over the next 2 years, essentially. This year we're going into now, this is the first step of that, essentially, right? So that's kind of wraps up kind of Este Lauder there. Now, where do I see the stock price going over this next 36 months? My opinion on where the stock price is going, I believe this stock is going to the $200 to $300 range in the next 36 months. Do I think we take out the old all-time high, which was $370? I don't know about that. It's possible, but I'm not going to get that confident in Este Lauder yet. Okay, I got to see a lot more revenue growth. I got to see them if I could see them get back to strong double-digit revenue growth, that would give me the confidence to actually think the stock's probably going $370. But for now, I have my doubts about that. Because I'm kind of expecting them to get back to strong single-digit revenue growth, right? Which is going to produce incredible double-digit profitability growth, I think, year after year for the next several years. So I think we're likely headed to the $200 to $300 range. The bottom's already in for the stock. It was a long in for the stock. We hit that bottom in the 50s, right? And that was it. And so you got to understand the stocks, as I've explained this to folks many times, okay? And this is very important you understand this for turnaround plays. The stock prices always bottom way before the business bottoms, okay? And it's before you get that concrete evidence of the business is bottom, it's already bottomed, the stock. So for instance, we're not going to have concrete data that the business has truly bottomed until about 3 months from now. 3 months from now. But the stock price bottomed about 3 months ago. So think about this for a moment. The stock price bottoms about 6 months before you get the concrete data. And the amount of times I've seen this happen, guys, is all the freaking time. I've been in this market like 17 years now. The amount of times I've seen a stock bottom 6 to 9 months before you get that concrete data about the business bottom, it happens all the time. And it's exactly what's playing out here with Este Lauder. So, people think like, oh, let's wait to get the concrete proof. You can do that. And, there's nothing wrong with that other than you're going to miss out on ridiculous gains. Because listen, 3 months from now, of course, the market could get hit or something like that over the next 3 months. But there's a possibility that Este Lauder is $100 plus, well over $100 plus by the time the concrete data comes out. So it's like you could have paid 50 something a few months ago, or you can pay $100, a double up of the price. You say, well, at least I got the concrete data, and true, you just missed out on a double up. That's an important thing. This game would be so much easier if you could just wait until you get like the all clear sign of like, oh, I can invest in a stock or I can invest in the market, and like now's the perfect time. Oh, it'll be so much easier. It doesn't work like that. It doesn't work like that. You've got to be able to forecast things that are going to happen in the future, likely, right? And then place bets. Okay, now that brings me to Nike. Este Lauder reminds me so much of Nike. So much of Nike. Like both these companies remind me so much of each other. The stages they're at and their turnaround plays and everything like that, man. And I think we'll be fast forward 24, 36 months from now, even 12 months from now, and people will look back at Este Lauder and Nike and be like, we should have placed some chips out there on the table on those two brands. Like, you don't want to go against those two brands. Anybody that's gone against those two brands, over the past 4 or 5 decades came up on the wrong side of that. And I think that's going to be exactly the situation. People are doubting Este Lauder, people are doubting Nike. And I think even within 12 months, they'll be looking back and be like, dang, man, we could have got Nike at what price? We could have got Este Lauder at what price? Like, why did we stay on the sideline? Okay. Alrighty, next up here, let's talk some hedges. So first off, it was kind of surprising to me how much interest there was in this hedge here. And the reason being is I'm not known as like a big like hedge guy, right? Like people know me because they're like, oh, he's got a ton of successful investments, right? He's had all these stocks that, end up booming hundreds of percent or thousands of percent. And, he teaches a lot of that stuff and how to find those type of opportunities in the market. Like that's how people know me. It's not like I'm known as like, oh, he's like a Michael Burry. Like he's a genius betting against the market. Like no. So I was surprised there was this much interest. But I will say I've done pretty dang well with my hedges this year so far. So I had some hedges kind of at the beginning of this year, right? And all 3 of them printed money in the public account from being actually relatively small hedges. This Costco put option made $9,500 profit on that one. And that was on a cost basis of only $14,000. Toll Brothers was a $10,000 cost basis and made $7,800 on that. And then Walmart was a $13,000 position, made $7,300. So we've had 3 banger hedges, okay? And my hope is we're going to have a 4th banger hedge in regards to this matter, right? And yeah, we shall see here. There's an important point I make, by the way, before we get into the hedge. Listen, everybody's got to understand this about my hedges. I do them for protection. I'm protecting myself against downside in the market, right? That's why I really do a hedge. Now, I want to find an opportunity in regards to usually an individual stock that is really compelling, that I think that stock could go down a lot. And so I'm kind of playing it 2 sides, but it's really for protection for the portfolio. And I'm usually doing it sizing wise. Sometimes I can go, less than 1% of the portfolio. Sometimes I could go even 2 or 3% position sizing. This is a little less than a 1% protection here, but it's for protection, right? Now, side note here, guys, I might need to sell Adobe stock. I'll be honest with you guys. No, I'm like, so I typed in, this is Adobe's new Firefly product. I said, make a modern glass mansion surrounded by guards in suits, right? So this is an AI related image here. And it was like, I looked over the image for like 10 seconds and I found like just so many things wrong with that, right? First off, is this a demon? Is this a demon? What's going on with this guy? Oh my gosh. I told it to make me a modern mansion. What is this? This looks like a little like I mean, what is this, a New York City apartment? Come on, man. What in the what is going on with this dude? Oh my gosh. And then, is this man Jesus? Man's walking on water. What in the world? Oh my gosh. Unbelievable. So anyways, Adobe, we got some work to do, okay? All right, guys, so the hedge I did, and then why I did it, is a company named Duolingo. Little Dingo, okay? Duolingo Little Dingo. So what I went ahead and did here is I hedged against the stock. It was right around $38,000 hedge, roughly, okay? So a little less than 1% of the public account weighting, nothing crazy. So far already up 27% on that in like 2 days. So already total gain on that one, $10,266. Done very well so far. Now, the put options I bought there, they're 260 strike price. So they were way out of the money. Now, I'm only going to do that if I think a stock has potentially massive downside and I want to make potentially a lot of money, okay? Because it is really risky when you go way out of the money like that. But the gains can be insane. And as you see with Duolingo here, like, 2 days already 27%, but it can easily go the other way as well. Do keep that in mind. So March 20th, 2026, these options expire here in regards to Duolingo, right? I got 20 contracts overall here. Now, why Duolingo? Like, why this company specific? Well, there's very good reasons why this company specific, okay? Here's my base case for this Duolingo company, okay? You got to understand they went through a major hype cycle at the end of last year and kind of going into the very beginning of this year, okay? Now, that brought in a ton, and I mean millions upon millions and millions of new users to this product, okay? The hype cycle from what I have seen on social media and whatnot is now over for the company. Well over, okay? And so I think their revenue growth is going to be much slower rate in 26 than it was in 25. And I'm talking much slower. Like this year, you've seen some of these growth rates on revenue are like 40+%, right? They're going to have to comp these numbers next year. And I think it's a very low probability, right? If we're playing poker, a lot of things I learned from playing poker over the years, you got to always account for all probabilities. Maybe Duolingo goes through another crazy hype cycle. And if that happens, I might be in trouble in regards to this hedge, right? Could expire worthless. I could lose all $38,000 on this hedge, right? 100%. I think there's very low probability they're going to have some crazy another hype cycle in regards to this that's going to bring in tens of millions of new users to the platform, like in a quick amount of time. I think it's very low probability of that. So the moral of the story is revenue growth next year. My base case has them at 20%. I'm not even convinced they're going to hit that. Which means if you go down to 20% revenue growth, you need to have a major valuation derating in the stock, which means the PE ratio could go somewhere into the 40 to 45 range, which means the stock price in 2026 likely goes to 170 to 190. And once again, I'm not even convinced they're going to be able to hit that number next year. I'd actually be impressed if the company could hit 20% revenue growth coming off these comps that they're going to be having a comp against next year without a hype cycle. Whew, good luck, man. Good luck. And then over the years, like I think their revenue growth is gonna, slow substantially. And there's even in my base case, come 2029, which isn't relevant for this hedge because the hedge is expiring in March of 2026. But I just don't think Duolingo is a good investment at all. I think the company is actually, going to be a significant underperformer over the next few years. No. When I look at this company, you can make an argument that this lady might be the most important person at the company. She's, been the social media guru behind this company for the last several years, many years, okay? And it is reported that her last day was on August 15th. I don't know how you're going to replace her. Like when you got a marketing genius and she's so much of the success of this company by getting people like interested on Instagram and TikTok and like all the memes and stuff like that. She did an unbelievable job running the social media for this company. And I think she's probably the most important person at the company, honestly, and truly mean that. And she's gone now. I think that's going to mean troubles for their new members coming in for the next, probably several years, but certainly in the short term. And here's the deal, okay? We just got a glimpse when they reported their numbers last quarter. We already got a glimpse that things are starting to turn bad at Duolingo, okay? Now you look and you say, okay, monthly active users were up 24%, daily active users up 40%, paid subs up 37%. might say, okay, there's nothing bad there. No. Look at the quarter-over-quarter monthly active user numbers. They went from 130 million down to 128 million. The monthly active user number is already starting to go down for Duolingo, which means you've likely already seen a peak for the company. Now, that revenue can still keep going up for, the next year, for the remainder of this year, even into next year, right? And that's why I don't have revenue going down. That's why even next year, under my base case, I have their revenue going up 20%, because they could still squeeze quite a bit out of the existing members, right? The people that already signed up for Duolingo here. But if you're not going to get a new massive influxes of new users, that's going to end up hurting your revenue substantially down the road here, okay? A company reminds me a lot of GoPro and Fitbit, okay? Now, GoPro and Fitbit, these companies reached a saturation point. And as somebody that used to invest in GoPro way back in the day when that was like the hot product, right? Eventually, GoPro reached a saturation point because only so many people want an action camera. Fitbit, the same exact thing happening with them. In Duolingo, I see it the same exact way. Only so many people want to learn a new language. If you think this is Facebook and they're going to be able to get to 3 billion users, it's not. I hate to break the news to you, it's not. Their new big product is, we're going to teach you how to play chess. Okay, good luck. And that reminds me so much of GoPro and Fitbit. They would start, once they started kind of reaching somewhat of a saturation point, they started trying new things because they wanted to, crap, man, like growth is starting to stall a little bit here in terms of new people coming to it. I got to get it. And what you're left with is a core user base, which isn't bad. And you can have a sustainable business model. No, the difference between GoPro, Fitbit, and Duolingo is Duolingo is going to still be able to put up very good numbers for years to go in the future. Duolingo is likely not a stock going to $5 and under, like GoPro did and like Fitbit did. And the reason being is GoPro and Fitbit were hardware companies. Duolingo doesn't have to deal with that. Duolingo is more of a software play, so Duolingo will be fine for years to go in the future in terms of like they're not going to go bankrupt anytime soon. They're going to still be printing money for years to go in the future. But what's going to happen is their stock price is still going to crash. It's just not going to crash to the point of like a GoPro or Fitbit where it goes under $5, in my personal opinion, okay? Now, in regards to Duolingo here, here's the other deal, right? I always set up these hedges as protection against the market in case the market gets really rough, goes south, right? Duolingo, this is so set up like for this stock to get absolutely obliterated if the market goes down. The company trades at trailing 12-month P of 139, a forward P of 102. I mean, all it would take is the NASDAQ to go down 5 to 10%, and you could see Duolingo easily with a 2 in front of it. That's off like a 5 to 10% move in the NASDAQ. That's not even like a stock market crash. That's not even like a major correction. Like NASDAQ goes down 7.5%. Is that something crazy? No, that wouldn't be anything crazy. You'd be like, oh, okay, NASDAQ's had a nice little pullback recently. And you would see Duolingo with the 2 in front of it. I'd be out, probably double, tripled up my money because there would still be a lot of time left on the position. That's all it would take. Market gets hit, the stock's going night. And so it's protection for the portfolio. Now, might not happen, right? Market might just go skyrocketing. I might love what Powell says. Now, it's also possible I could take some profits before on this position before Powell speaks, if let's say the market's really rough on Thursday. I don't know. Like those are all things I have to consider depending upon many various factors. But the moral of the story is here in regards to this is, hey, if it goes south, like, it's going to be a very, 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 very profitable hedge here, right? Now, the thing you got to understand, I don't risk it all when I make these hedges, right? The hedges so far this year in the public account have turned out phenomenal, went 3 for 3. Maybe this one's not like that, right? Maybe I lose all $38,000. I am perfectly fine with that. Perfectly fine with that. Because I lose all $38,000 on that hedge, that means the market probably went up substantially. And I probably made $500,000 or $1 million in the public account. So, okay, I lose all $38,000, but my long positions increased by $750,000. I'll take that trade-off. No. If this hedge prints, right, market gets hit hard, I'll take those profits. I could see this position maybe a little over doubling up. So it could end up going from a $38,000, what I put into it, to all of a sudden being worth like $100,000, let's say, cash that out, and then let's say the market's, you know, off 7-10%, something like that, then I could go ahead and put that money in stocks at much lower prices, right? And I have $100,000 there. So there's many ways to go around this, but I never risk the farm with these hedges, just in case they don't go the way I think they're going to go, right? Which is always possible. I could always be wrong, and that's fine. I bet heavy on long positions. That's where I risk the farm, on my long positions. That's where I bet heavy. And even on an individual stock, I still never risk the farm. If you look at my position sizing, what I put in a stock, I always manage that risk as well, right? So I always have my bases covered across the board, right? And this will be no different. So we might cash out with a crazy profit on this one, and that's going to be fun. And we might not, and that's fine. Whenever I go into a hedge, I'm fully of the understanding that I could lose all $38,000. Even when I go long a stock, I'm still of the understanding like I could lose it all. It's very very unrealistic. You know, I'm going to put money in Este, Lauder, or Nike, or Cake, or whatever stock, and I'm going to lose it all, right? Very low probability of that, but still I'm of the understanding that could happen. And when I hedge, like, that's to an extreme extent. Like, all 38,000 could leave me, right? Duolingo, little dingo, could go to 400, 500 by March, and I'll be like, dang, oh, okay, it's fine. All good with me, man. All good with me. That's all. It's the cost of doing business. You can't play this game on a high level. I was watching this little interview with Jerry Jones earlier. Jerry Jones, he risked his whole net worth, $800,000, on an oil well. And he said, I got the gusher. Yeah. With that, I got $100 million. And I bought the Dallas Cowboys. You know, and now Dallas Cowboys, I think, are the most valuable franchise in all of professional sports, if I recall, right? But, you know, the moral of the story is here, you know, it's a cost of doing business. Now, for everybody that's in my private stock group, I record you guys a video that you might want to watch. I think this is a very valuable one. And it talks about managing a hedge like this and my thought process, a higher level video going into depth and kind of how I manage a hedge like this, how I think about it across the board, right? And, you know, cashing out some contracts at certain times versus others and things like that. So if you're in the private group, you might want to check out that. If you're looking to apply to join a private group and you want access to all those exclusive videos, right, moves I'm making in my $3 million plus Fidelity account, access to 1000xstocks.com, all my courses teaching you all this high level stuff so you can begin to understand this game on a higher level, right? That's pinned comment down there. You click on that, fill out a form. Let's see if we can get you access there in the next week or so. Well, you know, why are you going to keep wasting time? You want to learn this stuff on a high level. Let's take it up, baby, okay? Pin comment down there, and then once you join us in there, send you your Steel membership card for 1000X right here. And then we'll send you your Steel membership card for the private group as well. Anybody tell me what stock that is? All right, guys, appreciate you joining me. Much love, and have a great day.